You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. Well, inflation numbers, they're a little less devastating than they were last quarter, but last month, but they're still going up. Consumer sentiment still going down. Cryptos, Bitcoin keeps bouncing off that 2017 high of 19,700, but overall the chart looks negative. With us now, Eddie Yoon, and you should take a look at his site, eddiewoodgrow.com. Eddie, it's great to have you back on. So first, talking about inflation, consumer sentiment, that also is tied into the strength of the job market. Of that three-legged stool, the job market still appears to be holding pretty fast and strong. Is the consumer sentiment wrong? Are they just overly negative? Or is there more going on underneath the surface?
Well, I think there's a couple of things going on. One is, this idea that more than one thing can be true at the same time. I think consumers are nervous, as they can see, in particular, food prices going up. Obviously, gas prices have been high. They've come down a little bit, but they're still much higher than what they're used to. But then at the same time, while they're seeing inflation and, we haven't even talked about mortgages and rents haven't kicked in yet because that's a lagging factor just with what the Fed has done. But at the same time, we're coming out of, this is the first kind of real year that people have felt free to do what they want to do post-COVID. And so TSA travel numbers have been up dramatically year over year. So I took that as a sign that, regardless of what the inflation and numbers were saying, people were going to do their makeup COVID trips one way or the other. So people have been spending this summer. They've been traveling. They've been seeing family, been seeing friends, and which has been wonderful. So that's what's kept the economy going. As you know, 3/4 or 2/3 of the GDP is consumer-driven spending, and so the consumers held up their end of the bargain. Businesses have been tight. We'll see if B2B spending holds up. A lot of folks have taken kind of precautionary restructurings and workforce reductions to, get ahead of this and make sure that they can survive. If you're in a startup, make sure you have enough runway to keep going. But at this stage, I think time will tell what happens. Inflation should be coming down towards the end of the year. Because like car prices and used car prices, that has come down already. So a lot of this is certainly the Ukraine-Russia deal, and then some of this is the Fed seemingly over-responding in some level to what have been the third factor, which are largely temporary supply chain shocks. As again, we're coming out of COVID, people are trying to figure out how to get things going again. And so supply chain concerns with cars due to chips, that should be easing car prices. But Kerry, I think the long-term thing that's happening is the consumer has kind of figured out that trusting large institutions is not really a good idea. Like trust in government, trust in big businesses are at an all-time low. And so I think what you're going to see are a pretty dramatic shift away from classical employment, where I work for a company, to contract employment and a lot of solopreneurs. You're going to see people who are saying, part of the whole interest in crypto is a function of like, do I really want to put my faith in the U.S. government or government writ large in the same way that I did beforehand? And do I want to hedge my bets there? And so I think what you're going to see, if you think about the U.S. economy over a couple of hundred years, or even the global economy, like, pre-industrial revolution, everybody was a solopreneur. Like you were a tailor, I was a farmer, and we bartered and we got stuff done. And then the Industrial Revolution brought about this whole, well, we have to work for companies because they will pay a steady wage and there's some security there. If you don't have security from large institutions, why would you do that? So I think people are going to go back to their kind of entrepreneurial roots. And that's why I think we're going to go through a lot of changes that the problem with most of the experts is they will read into it as, is it inflation? Is it something that we have to deal with? But versus a systemic shift away from the ways things were to the way things will be going forward.
All right. So that means obviously not working in these large office buildings in Manhattan. They said they're still nearly 2/3 empty on any given day. That changes the whole dynamics of what a city is. New York City, thousands of businesses live off of the commute, off of the rush hour, from the newsstand uh, to the salad bar to all these restaurants. And now that people aren't going to the office, they don't need this delivery, service, food delivery, all these things. So this is a major transformation. Maybe we see people really kind of give up city living. These cities are in trouble, escalating crime rates, just a feeling of they're out of control, and exploding costs. Even the inflation here that we're seeing, I think, was well underway in New York City long before the pandemic and the resulting money printing that took place. So this really is a major transformation, as big a transformation as when you used to live on the farm and then you went to the city after the Depression looking for work. So now it's like you go on the internet looking for work and you leave the city for greener pastures, if you will.
Yeah, no, you said it well. I think the internet is really a digital farm. It's, you can plant things, you can grow things, you can harvest it for, ever and ever. If you you don't have to have a book agent to write a book and go through a traditional publisher. You can just write something and upload it on the Amazon. And there you go. If people find your work and they like it, then you'll have a steady stream of income. So like, imagine a world where, you would leave the farm, as you said, to go to the city because, much more certainty, much more diversity of opportunity to meet people and to socialize, as well as kind of neat and fun experiences. As the world shifts from a native analog to a native digital world, if the internet is the world's greatest digital farm where you can plant things and grow to generate income, you can now meet people that you want. And the vast majority of marriages now occur from online dating or dating apps versus meeting people in real life. And if you're looking for experiences that you can have that are unique, I mean, certainly some of them are going to be still in major metropolitan areas and cities, and you can't go see the Yankees in person, but maybe you don't want to go to a 3-hour baseball game in real life anyway. You just want to go experience it online while you're watching Netflix and doing something else at the same time. So I think this whole idea of experiences, entertainment, meeting people and socializing and generating income, folks that can do it all online, then it doesn't really matter where you live. And that's why you're seeing places like Nashville and Austin and Phoenix really take off and grow as people leave, the normal big cities into some of these up and coming ones.
Yeah, it certainly is an interesting trend that we've never seen anything like in our lives before. Yes, post World War II, we saw the transition of people moving from urban areas to suburban areas, for sure. And suburban sprawl, it was called. And then with the advent of forced busing, we then saw more people leave the city. Then in the 80s and 90s, early 2000s, we saw people moving back to the cities, even cities like Buffalo, New York, which was decrepit. I think there was a sign up on the bridge there, will the last person who leaves please turn out the lights? All these cities. Now people have realized that perhaps quality of life is better outside these cities, and the problems which led people to initially flee the cities have gotten even worse. So for the trend into the future, It's you got to be someplace. Maybe you don't want to live in rural America, but there's a place between rural and the suburbs called the exurbs. Maybe they're the biggest beneficiary of the trend that you're seeing now, Eddie.
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Yeah, no, I think that's right, and it's an interesting phenomenon where the smart companies that are facing actually, as you said, going to not only be aware where people are moving, be it suburbs or exurbs, but create, frankly, their own cities. So, like you see what SpaceX is doing in South Texas, they are literally creating a town that is designed to house all the workers that they need for their SpaceX enterprise out there. And I think you're going to see creation and enterprise, unlike at any scale, where large companies that are prescient and smart will be like, well, we're going to set up a city. We're going to move to this area. It's maybe undeveloped, and we're going to build from there and design a living area that suits our workers and residents in a way that allows us to, pick and choose what we want versus conform to the existing structures of what has been beforehand. And I think you'll see, what's interesting is when the cost of living varies so much, as you said, city, suburb, exurb, that you may actually find that people will, I think one of the big things that will happen is multi-city living or multi-area living, where it'll, you had people who were retired who lived in the Midwest and then snowbirds in Florida and Arizona. But I think you'll actually see people who perhaps spend the most of their time in some very low cost of living area, run their lives online, and then either visit or Airbnb where they want to be, in certain parts of the year. And I think you're going to see a lot more flexible, this whole kind of native digital lifestyle has yet to be determined. And I think you're right. Like, we haven't seen this transformation and shift, unlike anything since probably that farming to industrial revolution time period.
Yeah, well, there's a lot ahead, but the trend seems like it's firmly in place. And hey, maybe the cities will get their act together, turn things around, control crime. At the present time, you have to wonder whether that's going to happen. So let's talk cryptos. Pre-call, you were saying everybody has discovered that digital assets, cryptocurrencies, aren't a necessarily non-correlated asset. What do you mean by that?
Well, the part of the whole, portfolio theory is, if you want to make money in any market condition, you want to own a diverse set of assets. So, obviously stocks and bonds, but also real estate. And, historically, when the stock market goes down, there are certain things like gold or real estate that may not necessarily go down with it. Whereas like stocks go down, bonds can grow in favor, but things are, there are certain things that if you don't have to have all your eggs in one basket for still your portfolio to go, massively up or down with other things that are there. So, you can say, I'm diversified. I own Apple and Google, but you're still going to get hit from a tech bubble perspective, right? And so crypto, I think was originally pitched as not only a store of value, but something that had scarcity to it because there's only so many Bitcoins that can be made. it's a fixed number. But then, part of the thinking was if I put my money into crypto, then I will be less, or I'll be more immune to the volatile swings of the stock market or the dollar or things like that, right? Because it's not controlled by the U.S. The Fed doesn't dictate crypto policy and impact it. However, as the stock market has corrected, given the Ukraine invasion and everything else, so has crypto as well. So, I think people are finding like it was not the safe haven that they thought it was. That if you look at it, it's very strongly correlated with the stock market. So when the stock market goes up, crypto goes up. When the stock market goes down, crypto goes down. And so if those who had invested in crypto from a diversification theory had a rude awakening of like, aha, I'm not particularly safe in this asset here. And then you have, the thinking about why you would buy crypto has always been a couple of fold of one, I think the price is going to go up because there's a supply and demand dynamic of, more people get interested in crypto and therefore they're going to want more of it and there's a limited supply. But that's only true of Bitcoin. And so I think there's kind of one theory of supply and demand. And then when the market tanks, then there's not a whole lot of demand out there for, other assets that people aren't familiar with. And then unlike an enterprise like, we mentioned Google, Google is more valuable now than it was 10 years ago as the business value grows. And that isn't true of crypto necessarily. That aside from a couple of things like Ethereum and whatnot, like these are currencies that don't have underlying cash flows that can naturally appreciate what you do with it. And then you have the functional benefit like real estate. If you own a real estate, you can stay there. There's a real functional benefit to it, right? And so, and crypto as currency has not proven to be functionally very useful just yet, just because of the volatility with it and some of the transaction price benefits have not materialized just yet. So, I think we're still early innings. I think it's one of these. There's probably a bunch of, it's kind of like the .com in the 9901 time period when it melted down. A lot of people shook out, but it wasn't like the internet was dead at that point. It was just some of the irrational exuberance has been shaken out of the crypto market, but the supply demand thesis remains. Is there underlying enterprise value from a cash flow perspective? Some of the crypto assets like Ethereum, you can build applications onto it, so that might be a positive. And then thirdly, if there is a functional benefit to it, then if people can transact in a way that is more frictionless, then, like where crypto will take off is if you're a small business owner and it costs you less of a transaction fee to take money in crypto versus a Visa or MasterCard or Amex, right? Because you're a small business owner, you don't like paying those couple hundred basis points to those guys to take in your revenues. And so it's right early innings. Yeah. Early innings, but we'll see how this shakes out. I think there's still reason to be bullish long term, but the diversification theory, that's out the window. So
all right. So the bloom is off the rose, if I might paraphrase you, Eddie.
Well, there's four roses. There was the supply demand thing. There's is there underlying value that'll grow enterprise-wise? Is there a functional benefit? And then is there diversification? That diversification bloom is certainly off. The other three remain to be seen.
Okay. Well, I guess we're going to see them soon, aren't we?
Yes, we will.
Yeah. Well, I don't know if you ever remember that old thing from the 70s, 80s, 90s. Real estate never goes down, right? And then the stock market never goes down, except when it does, or if you have a longer memory than the person who's saying that, but it always goes up in the long run. And we're going to find out if that's true for cryptos and digital assets. I'm a skeptic, not a skeptic from the validity, the technological validity of these assets. I'm a skeptic from the standpoint of whether they're truly a different market than any other we've ever seen before, whether they're not a market, that they're just ingrained and that automatically ensures they're going up. It's going to be interesting to see. Eddie, really appreciate you coming on. Just tell us again your website, where we find you.
Yeah, you can find me at eddiewoodgrow.com. You can also find my writings on categorypirates.com. It's our Substack newsletter. We're the top 5, or number 4 actually, business Substack out there. And for any of the Kerry Lutz listeners, if you ping me online, send me an email, send me a tweet, interested in Category Pirates, I'm happy to hook them up with a free comp trial. So,
oh, nice. Very nice of you. Appreciate that. Hey, if you've got a question for Eddie, shoot me an email. I'd like to know what your thoughts are about the future of digital assets. And particularly, I want to know about what you're encountering with inflation, consumer sentiment. You up, down, sideways? I don't think there's many people that are wildly optimistic at this particular point in time for a number of reasons that we don't need to get into. But shoot me the email to kl@kerrylutz.com. And if you got a question for Eddie, just let us know and we'll get you an answer. Eddie, always a pleasure. Thanks so much for coming on.
Thanks, Kerry. Same here.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.